Hi there, a very good afternoon to all of you, and welcome to this live feed from me, Simply Stocks. And today I'm going to talk about the markets and a couple of stocks that would interest you a lot. Apart from that, would also answer your queries. So hopefully, I'll be answering a number of queries on your behalf, whatever questions that would come up on your side. So basically, the week has been pretty tumultuous, and we have seen a lot of, you can say, up and down movement in the market. And we saw on the Friday session how the market fell from 10,000 to 9,500. And I had that inkling feeling that, okay, 9,500 is here. Maybe we'll see an upward movement going forward. So it is kind of an interesting play that took place. And I've seen such movements before as well in 2013, 14, in 2010, 11, and in some part in 2016 as well, just before the demonetization phase and midway through 2016. We had a similar situation in 2017 when we had that surgical strike scenario and all in June. So on many occasions, so we have seen markets make a bottom and then go up. So we have seen that 9,500 or so is becoming a strong support in the market. And look at the move that we have had in the Nifty afterwards. Hello, Titi Chako. Hello to all of you. Hi, Sahil. Uh, Hello, Hitesh. Let other people join in and then we'll discuss about the market. We'll also discuss about some of the stocks. There are two stocks that I have brought forward to discuss. One is Eicher Motors that I would sincerely would like to discuss because it has announced a stock split. So finally, that is 17,000 or an 18,000 rupee stock would go down to be something like 1800 rupee. That's one thing. The second thing is about the second stock that I would like to talk to you about is probably uh, this is into the plastic domain. This is into the pipes domain. It is a small cap, and I'm talking of Supreme Industry, which also makes chairs and other kinds of plastic materials. And it is regarded as one of the best in its domain. So these are the two stocks I'm going to talk about. And apart from that, I'd also answer your queries going forward. So let's begin by talking about the market. So the markets did a U-turn after the opening. So we have seen that the market opened at around something like 9,500 or 9,400 levels, and from that 9,400 500 levels, we saw a tremendous amount of buying in the stocks. So we saw that buying took place in Asian Paints, in Titan, etc., from the lows, HUL, and so on and so forth. And eventually, with the larger banks getting bought into, we saw that the market not only went into green but went very close to 10,000 levels. What does that tell you? That first of all, that tells you that there is a lot of volatility in the market. There's a lot of speculation that is going on in the market, and people are not willing to let go of the best of the stocks that are in the market. So what we have seen is that marquee stocks are being bought at discounted levels. Marquee stocks are being bought whenever the market is falling. And probably what the investors are feeling that, okay, let's just let go of 1 years of earnings. Let's just let go of probably FY21 that will have no earnings, and then from FY22 onwards, which are the stocks that are going to perform really well. So we saw pharma, agrochemicals, as well as stocks in the you can say the diagnostic division doing well. We also saw consumer doing well, and it seems like that people have understood that consumer is going to be the play going forward. Once things normalize, consumer stocks are going to perform even better going ahead. So what we had was 9,500, then a move to 9,700, 9,750, and eventually market closing above 9,900. That simply shows you that although we and I as an individual always thought that the market should be below 7,500, the market should be below 7,000, closer to 6,000, because of what has been happening on the ground, because of the kind of situation that we are facing. We are probably looking at another shutdown of the economy, but probably that will not happen. The government cannot afford it. And that is why the market is believing that any discounted levels, any fall of 500 600 point should be bought into. So what lies ahead for the Nifty? I think 9,700 looks a strong support, immediate support. Uh, at the moment, 9,100, 9,200 looks a very good long term support. I still believe that the market should not have been at these levels, considering the kind of earnings we are seeing left, right, and center, and what we expect over the next 2 quarters. But still, we cannot rule out the market itself, and we cannot fight the market. We have to go with that. So at the moment, we are looking at 9,000 as the worst case scenario, and probably 9,700, 9,650 would be a good level to accumulate the stocks. But again, do your own due diligence. These are just my personal opinion as to where the market could find support at. So apart from the markets, let's talk about some of the stocks. One of the stocks that I would like to talk to you about is Eicher Motors. Eicher Motors has come out with its earnings, and there has been a sharp 44% profit drop, and that was expected primarily that there will be a sharp drop. But then it was not expected that the fall could be that steep. Because if you look at it, that these are not June numbers; these are March numbers, and Jan and Feb were pretty normal. And in that regard, the January and February went pretty well. So we believed that the numbers would be pretty good. March was not that great. So probably March has hurt the business. But then if you look at the overall scenario, the demand was lacking, and the demand was slacking even before the crisis hit India. And we saw that even the December quarter, there was a demand slackness, and March it just showed you that the numbers eventually went on going down further. Uh, Probably we are expecting that the June quarter would be similar or even worse off, because of the kind of situation that the country has faced, and the trucks business will suffer even more, or the large commercial vehicles numbers of Eicher Motors will suffer even more. Even the Royal Enfield business might not do that well, because people are losing jobs, and there are no jobs. There are lesser jobs available. People are getting into unemployment, and even people with high income groups, they are looking at saving money more than spending much. And if they would like to spend, they'll spend more on healthcare, more on food, etc., and keeping money in safe havens rather than buying bikes, etc. So I think June uh, will be more difficult. I think the stock may fall to 15,000, 15,500 levels, but then stock split will keep the market buzzing, or the stock buzzing in that regard. And I think this 10 is to 1 split of the stock has come in very well. I think the investors would take it with both hands, and now there will be more liquidity for the stock. More retail investors would like to get into a stock like that at 1,700, 1,600, 1,700 levels rather than 17,000 levels. So that's a positive. But the business scenario doesn't look that great going forward in 2 quarters, and hence I believe that one needs to look at one more quarter and then get into the stock. Or if you have a good 8 to 9 year time horizon, then probably you can get in at these levels as well, and on declines, and just stay put with the company. The company per se is pretty good. It is just that the business cycle of the business as a whole is not going through a very good phase, and it is going through a real downturn. uh, Second stock that I would like to talk to you about, and this is into the plastic division, and this is Supreme Industries, a very interesting play on the Indian economy per se, on the Indian wedding season, on probably infrastructure, real estate. If real estate does well, then their pipes would sell even more. If commercial real estate does well, then their other products of plastic materials will sell even more. A domestic economy, if it picks up, then the company would do even better in that regard. The company has come out with sluggish numbers, and this was expected for the March quarter. And I think things will get even worse for the June and September quarter. And these are probably opportunity to get into such companies as Supreme Industries. Very low debt, if any, working capital debt. Then the return ratios are fine at around 20 odd percent. So the operating profit margin is around 20% or so, and the ROE is around 18-19%, which is extremely decent for a company like a Supreme Industry, which is not a very large cap company. It's just a 5-7 thousand crore company, and doing pretty well. So it is a market leader in some of the pipes that they sell. They make chairs as well, and they are used in many functions, etc. And that's why I was bringing in the wedding season part of it. And probably going forward in the December quarter, the stock should see some kind of traction, some kind of upward movement in that regard. So next 4 to 5 months, a very good time to get into something like a Supreme Industry, in my opinion. Do your own analysis, and it is kind of a stable stock. It doesn't fall a lot. The promoter holding is good. There are institutional holders, mutual funds, etc., invested into the company. I think there are about 10%, 12% free float that is available. Low liquidity, yes, I would say not huge number of shares that are traded. But then the company's numbers per se are solid. Yes, the profits have declined year on year for the December quarter, but it has happened to all companies which are into the infrastructure or the economy related businesses, and this is one of them. But in this economic slump, in this real downturn, these are the stocks to pick up, in my opinion, and for a longer period of time. So this was about Supreme Industries. So I've talked about the markets, talked about Eicher Motors, Supreme Industries. Now let's just answer your queries. Whatever queries that you have, you can shoot it up. I would like to just inform you that the super chat feature would be on your screen. You can use super chat and super stickers to ask me questions to get a detailed answer on my behalf. You can also join my Patreon membership. The link would be in the description of every video that I post, and there you can ask me questions every day. Apart from that, you'll get access to my portfolio, my watch list, whatever I do with my portfolio, buying and selling, etc. All updates are given there. Apart from that, a number of updates that doesn't come to YouTube come there first of all, and a lot of articles that I publish from time to time. Whenever I get time, I publish articles on different stocks. So take a look at my Patreon membership page, and the membership starts at $2 and goes up to $10. All right. So the questions that are coming in from, so Hitesh has asked about OK Play. So uh, thanks a lot, TT, for your contribution. Thank you. Hitesh has come in with OK Play. Now this is an interesting company into you can say e-rickshaws and e-vehicles, etc. Very good company per se when I look at what the business is, but the numbers are not quite there. And that is why the stock has been tumbling down uh, over the last couple of years. They are into the business of having, you can say, environmental friendly vehicles. But if you look at it on the face of it, at the current moment, with the government grappling with the kind of cases we are having, etc., I think electric vehicles, etc., is the last thing on their minds, and hence the stock has been subdued. Uh, I don't know, but once the results turn around, then only you can look at and buy into such stocks. Otherwise, you need to avoid at the moment. Can I buy PFC and REC for long term? Well, I would avoid such stocks, although they are good dividend yielding stocks. Yet, I think stock appreciation per se will not happen. I believe that consumption will still go a long way in bringing Indian economy back, and people will end up consuming more of biscuits, cakes, soaps, etc., hand washes, sanitizers, and people will go ahead and buy probably or get into painting their houses, etc. So there are companies that you can look at in the large caps and look at mid to large cap consumption. They might do better. I have always been a proponent of small caps, but not at this point of time. I think the large caps will bounce back whenever the market bounce back. These are the large caps or mid caps which are going to perform even better. TCI Express is an interesting company, a good company, solid company, not much of a debt, but again, it is into a business which is not quite growing. And if you can understand this, that they are into cargo shipment, into courier shipment, courier, etc. People are now more moving towards the technology and sending files directly rather than making a courier or doing a courier, etc. And so on. Yes, shipment is available for many online companies, retailers, and all, and probably TCI is into that as well. But the numbers show a different story, and what we are looking at is that the numbers does not suffice the kind of valuation that TCI is getting. Apollo Tire, in my opinion, is an avoid. I think the tire industry, if you want to play auto ancillary, why not just buy autos? I think Eicher Motors at these levels is pretty attractive. Maruti is pretty attractive. Even Motherson Sumi, which has fallen from 100, levels around 80, it would be a good buy for a long term. Avoid Atul Auto, get into again pure auto plays. Again, best auto plays would be better. Positive on Voltas. I think Voltas any dips towards 500, 520 should be bought into. I believe that it should do well over a 3 to 5 year time frame. All right. Okay, Alok Industries is good, and the kind of thing Reliance has done with Alok Industry, it has probably revitalized the business of per se, and the company has come out of the ashes, and it should continue to do well on the bosses because Reliance had got into it, and now they are making PPA kits. So if you have bought it at lower levels, kindly just hold on to it. Avoid Atul Auto, as I said. Balkrishna Industry is a good company in the auto ancillary space, but since I'm avoiding autos at the moment, and if I have to buy, there are many auto companies that are coming at discount, then why would I look at an auto ancillary play? Okay. Dixon Technologies is good. The results have been good, and I suppose that the stock has run up. Probably it will consolidate between 5,500 on the upside to 4,500, 4,200 on the downside. But overall, from a 3 4 year time frame, Dixon looks extremely good. Okay. Galaxy surfactants is good. It is just that the product that they are making and or the formulations that they are making, other companies may also make. They don't have the exclusivity on it, so probably that would hinder the growth. But overall, the company looks good. GMM Fowler, any 15 to 20% decline, you can get into. Don't get into GMM Fowler at a mega rise. Dixon Technology around 4,200, 4,300 would be good. Richako has asked that you give a 3 year term for pharma. Is it the same for chemicals? What about Reflex rights issue? I have not studied Reflex. Thanks a lot, Sai, for your contribution. And thanks a lot, TT, for your contribution. I've not studied defects. Once I do that, I'll definitely tell you. About chemicals, I really don't know. And why I am avoiding it is just because that, see, I'm a long-term player, so I look at 4 5 year time frame. I think over a 5 year period, anything can happen. India would come out with the laws that maybe may prohibit some of the chemical companies. There could be that China may start selling more and all. So there are many, you can say, externalities that are attached with some of the chemical stocks. Yes, I like some perennially. So Aarti Industries, Pidilite, Galaxy Surfactants, SRF. These are good companies that you can hold for a longer period of time, but not per se the sector. I don't think whether it's a 3 year play or not, but yes, in the pharmaceutical sector, I'm pretty sure that it is a 2 to 3 year play. Yes. Spencer Retail is good, but why would you like to get into such a small retail player? Why not just into Reliance and Reliance Retail? You play Reliance Retail with it, or a DMart on declines to 18 1900 would be very, very interesting. Century Plywood, it has fallen a lot. If you have a 3 to 5 year time frame, then you buy and do not look at it for 3 to 5 years. Probably you'll get to what a good return. But at this point of time, next year could be difficult for Century Plywood as well. Positive on Britannia, positive on IOL Chemicals, especially Britannia around 3000 looks very attractive. GMR Infra, if you are not in many, if you're not in heavy loss, then kindly exit the stock. Thanks a lot, Sai Charan. A very good company, Insecticides India. I would rate it similar to Bayer Crop Sciences, similar to uh, many agrochemical companies that are currently, which are very good. UPL. So insecticides is good, but then you have to understand that this companies in the agrochemical division will not move every month, every day, and it would be sideways for many days. Probably long term, it could end up being a multi-bagger, but remember that agrochemical space will only do well when the rural economy really does well. At this point of time, rural is doing better than urban, but whether it will continue or not, it would be anybody's guesses. Raddington for me is an avoid. It is making like the hardware components, etc. Probably look at other pure consumption plays rather than Raddington. I don't know. Can you just explain what is GFL Limited is all about? Aegis Logistics, I have the same view as I had with TCI Express. I think the logistics space, whether it's Gati, Aegis, or TCI, they will do well only when the economy ends up doing really well. Okay, Greaves Cotton is good, but perhaps better chances would be to get into something like escorts rather than Greaves Cotton on declines. All right. Shall I exit Kilpest bought at 116, have 2 years view? If you have a 2 year view, around 190, 200 would be a very good level to exit. If you have more than 2 year view, I think the stock can go to 300, 350. 116 is a very good level to get into. I think on a circuit around 170 or 180, yes, you can exit. Okay. IGL is a good stock. I think IGL on declines can be bought into, but apart from IGL, I think MGL also looks good. 1000 levels is a very interesting level to buy MGL at. Below 1000 would be even better. But I prefer MGL over IGL purely because of the kind of stock movement that MGL has compared to IGL, not because of the business. All right. I need to analyze Brightcom Group and only then I can come up with any viewpoint. Info Edge is good. Info Edge is good below 2600, closer to 2500 or so. If there is a major decline in the stock, only then get into Info Edge. Avoid Wonderella holidays. All right, guys. So this was a small live session that I wanted to have with you all. Thanks a lot for your queries. Thanks for being online. But kindly make sure that you'll be online in the next session, probably on Wednesday. That I'll post. Kindly keep on posting your queries here and try to visit my Patreon website. And if you can able to, kindly do support me on Patreon.